So pilots are paid now more than ever in the past history of aviation at this point. Delta has done a great job. United, maybe soon American, will have some of the best contracts they've had in a very long time. And this is set up with all the pilot hiring has set up a great influx of pay and extra cash for airline families. I remember starting my career off. I flew from 2002 to 2014. I think I got paid maybe $18,000 my first year as a first officer in a turboprop in the Northeast. So things have come a long ways, but I think there's still some principles in creating a solid foundation as an airline family. And so people still come out of school with quite a bit of debt, especially now at higher interest rates, where the private debt's being used for education and getting the ratings and everything. So really, I jotted down three things I felt like that, or I guess really four things that I felt like that airline families should be focused on. One is eliminating debt. So you get your first airline job that pays much better, but it also costs more to live now. You're probably coming in with some credit card debt or some school debt. Your first priority is making sure that you eliminate all that. That's how you build a strong foundation, is not having auto debt, not having school debt, not having credit card debt, so that you can have free cash flow to start building wealth going forward. We all know you have to pay your dues for a few years until you increase your hours, and eventually you can feed into a mainline carrier. Number two is live beneath your guarantee pay. So if your guarantee pay is 70 hours or 75 hours, but you're always flying 80, 90, maybe credit over 100, I wouldn't always bank on that. There's been times like right now where extra work can be picked up, but there's also been times when there wasn't extra work to be picked up. And so you should always be prepared for that. So at least make it where you can live easily on beneath your airline pilot guarantee. Another one is to build a reserve. So after you've eliminated your debt and you're living beneath your means, as they say, or beneath your guarantee, I would carry about 6 months of your living expenses in a high yield savings account. The reason for this is we all know that a mishap of some sort can have you not flying. A broken arm, bad blood pressure, a lot of things can derail you from aviation. Obviously, disability, short-term disability is always an option. You can purchase that through the company. In a long-term disability situation, obviously, most airlines have pretty good coverage, but you have at a regional level, you may not. So I would always make sure you have 6 months of your expenses set aside in a savings account. You can build toward that over time. That's not something that would get done overnight, obviously. After that, I would start maxing out your 401k. So at the regional level, you don't have the 16, 17, 18% non-elective contribution into the 401k. There's no market-based cash balance plans. You don't have any of that, but at least you start that habit of putting in that $22,500 every single year into your 401k plan. Once you move to a bigger airline, you can then do a rollover from that 401k plan to your new 401k plan. And so that's a great way to start building a strong foundation, because you're creating that habit of putting money into your 401k plan. If something were to happen with the economy, or you stayed at a regional longer than you had planned, that compounding of that money would be really, really important. So make sure you're always maxing out your 401k plan. Ultimately, aviation has great rewards, but make sure that you're taking advantage of the compound of the dollar and getting started early in your savings. Thanks for watching.